I think basically they'll cut, but they won't cut for a long time. So we expect it probably around about November. So what they've said so far, and what you've said, having read some of the stuff, is that there's sort of it's balanced decisions. Services inflation is still too high. On the other hand, they're worried about the consumer and they're worried about unemployment. So you won't really get a real read on inflation until you get the full quarterly for the CPI, and you don't get that to April. And so then you'll see where unemployment is, see where the consumer is, and the consumer will still be under stress. So I suspect what you'll get is a gradual, or you'll start at the end of this year and then maybe 100 points next year, which gets us down to 3, which we think would be roughly neutral. But absolutely nobody was expecting sort of any action from the RBA. And it sounds like from what you've just said, the rhetoric hasn't changed much.
Indeed, Alan. I'm just reading some of the lines accompanying the decision. And the RBA has said that the board is not ruling anything in or out on interest rates. Conditions in the labor markets have eased gradually, but higher interest rates right now are working to establish a more sustainable balance between aggregate demand and supply in the economy. How would you read these lines and interpret what the RBA could do next?
Well, I wrote my commentary on what I thought the Reserve Bank would do this morning, and it doesn't sound to me like I'm going to have to change it. Look, they're basically saying, look, economy is still okay. It's a lot of stress in retail, wholesale and construction, but other parts of the economy are good. And the other parts of the economy typically are the service sector where inflation is still strong. And so they're going to say, right, this is policy. We need to see inflation come down, and we will react when essentially inflation's come down and therefore real rates have gone up. And so I think that's a long way out. The market before the RBA was talking was August, September. We think probably November, unless you tell me unemployment's going to go a lot higher than what we've currently got and get there quicker. So, I think they're just sitting and watching, and nothing's really changed.
So even if the Fed were to cut rates midway through the year, that would not be a consideration for the RBA at all?
No, because the Fed's got a lot higher rates than us. What it'll probably do is push the Australian dollar up a bit. I think the Fed, well, whilst we got GDP growth of about 2% this year for the US, if we look at through the year growth, i.e. December on December, we've got 1. So we think the US economy is slowing. The only reason it's held up so well is mainly because of fiscal policy, and that reverses this year. So, I would expect to have the Fed in the middle of the year. I expect Bank of Canada, ECB, middle of the year, maybe Bank of England a little bit later.